Welcome back to another video. In this video, we are going to cover knowing the trading environment. We are going to break down the trading environment, what to look for in a trading environment, and walk through of multiple trades so we can properly apply the trading environment criteria. Now, before we get started, I want you to think about something. I want you to think about two people going to war. Now, imagine two people are going to war, right? It can be going to war, or two people are competing in a sport. They're competing in basketball, football, whatever the case may be. Now, if you're competing with someone at a sport or whatever the case may be, there's two ways to approach it. One way is when the competition is coming up, you immediately attack or you don't do any planning. Right? So imagine going to war with someone or a country and you immediately just go and attack the country, right? Now, doing that is a very, very, very stupid thing to do because you're not well prepared. You don't know all the situations. You don't know the criteria. You don't know the surrounding factors. Now, the smart way to approach this would be to check your surrounding conditions before attacking. Right? So the smart person at war checks the surrounding conditions before attacking. They look at everything around them and they say, okay, should we attack right now? Should we not attack? Should we be patient? Should we hold back? What should we do at this current moment with the surrounding conditions? Now you may be thinking, how does this apply to trading? This actually applies to trading a lot. This and trading is very, 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 very similar. How is it similar? If you guys remember from part 3, we went over this slide. Do not solely trade price action. This is the same concept. What a lot of people do is they focus on just price action when they're trading. So it's the same concept as you going to war and you just immediately attacking. You're looking at a chart and you just constantly attacking the charts without understanding the big picture, without understanding the surrounding factors around that price action, which is market direction and company sentiment. So once again, when you are trading price action, you need to look at your surrounding factors. You need to look at other factors that complement price action and allow you to create and make high probability trades. So these are the things that traders need to check during their environment or look into their environment, right? Number one, you need to look into the overall market, right? You need to look at what is happening with the overall market, such as the S&P 500, NASDAQ, Dow Jones, or whatever market you're trading, right? You need to ask yourself the following questions. What phase is the market in? Is it trending up? Is it trending down? Is it trending sideways? Is it reversing? Is it having a retracement? Is it continuing? What is actually happening? So when I look at a large time frame of the market, what is the market telling me? The second thing that you guys have to ask yourself is, what is the market sentiment? And what is the driving factor behind this sentiment? Okay, the market is going up. Why is it going up? The market is going down. Why is it going down? Okay, the market was going up and now it's taking a break. Right? So these things have to be evaluated. Next, you have to look at, is there any major economic event that I should watch out for? And this is very, very important because I notice a lot of new traders, even some advanced traders or people that have been trading for 2-3 years, kind of miss out on this big important event. And you guys are going to see what I mean when I walk you through some trades right in a bit. So you need to look into major economic events. And in part 8, I go over some economic events and what they are and the different types. So I will cover that in part 8. But for now, just stay with me for this lesson, right? So once again, you need to look at, is there any major economic event that I should watch out for? So for example, let's say the market is trending up and we have a major economic event. Let's say we have the FOMC meeting, the Fed meeting coming up. During that period, I'm not comfortable enough to take on a trade because that meeting, depending on what happens after the meeting, the market can reverse or either keep going up. I don't know what's going to happen, so I'd rather sit on the sidelines because I don't have an edge, right? So there's certain market events that you need to watch out for so you can protect yourself from taking on bad trades. Now, the next thing you need to look into is you need to look at the stocks environment. After you understand the market's condition, the overall market's condition, you need to understand the stocks environment. This is where you focus on the surrounding factors for the selected stock, whatever stock you're looking at. You need to ask the following questions for that stock. What phase is the stock in? Trending up, trending down, sideways, reversal, or is it retracing? Right? The next thing you need to ask yourself is, what is the stock sentiment? What is the driving factor behind this? You see a stock is going up. The stock was at 50, and in the past year, it went to 110. Why did it go to 110? What is the driving factor? Okay, cool. Now I can apply my price action, I can apply my critical levels and assume that this is going to keep going up, right? So that's very, very important to look at. Next, you look at, is there any major news event that I should watch out for? Example, company earnings or any major company event. Now, remember with earnings, if a company has earnings, we are not comfortable in playing earnings because there's no real way of knowing what the stock is going to do on earnings. Is the stock going to go up? Is it going to go down? So we don't have an edge. So we do not play earnings because we don't have an edge and we can't have an edge on earnings. So this is something that we obviously as traders want to avoid playing, right? There are certain option strategies with playing earnings, but holding a stock through earnings is not the best idea, right? Now, I'll give you guys some examples. If you guys look right here, we're looking at stock ULTA. So looking at this, person A might say, hey, I think I'm gonna buy this stock, or short, whatever the case is. I might buy it because of factor ABC. Now, what person A is ignoring is that the company has earnings the next day, right? And it's super important to be aware of that. So you as a trader, let's say you want to trade this today or tomorrow, you need to be aware that if you hold this overnight, there is earnings. There are earnings happening. So you need to be aware of that set of information, because if you're not aware, right, you will at times get caught up in a bad trade. That is the next day and the following days after. Look what happens. Stock misses earnings, right? Gaps down and starts taking a huge hit. Yes, obviously, if you shorted this or if you bought puts, you would have made a lot of money, but there's no edge there. There's no real way of knowing that, right? So with that being said, if you don't have an edge, obviously I don't recommend playing earnings if you don't have an edge on it, and it's simply very hard to have an edge on earnings in my opinion. Now, being aware of that, or being aware of any sort of event, is very, very important, because it saves you from taking on dumb trades. It saves you or helps you avoid trades that don't have high probability or don't even have a probability at all, right? Here's another example. If you look here, side-by-side market and stock view. Right here we have the SPY. The SPY represents the market. Here we have stock Roku. Now if you look right here, in 2018, around October till December, the market was selling off. There was a reason why it was selling off. I'm not going to get into the reason now. I'm going to get into the reasons in part 8, so you understand what the reasons are, what the economic events are that we need to look into. But for now, there was a lot of reasons why the overall market was selling off. You guys can see overall market is selling off. One of the reasons the market sold off was because of the Feds. I will explain what the Feds did and who they are and what do we look for when they present news, right? They said they were cutting interest rates very, very aggressively, and then around this time, the Feds stopped or came out with news saying, hey, we're not going to be aggressive on cutting interest rates. So in simple terms, right, and I'm going to cover all the economic events. In simple terms, something bad happened, a lot of bad things happened, and the bad thing that happened here is kind of getting covered up. It's kind of reversing the market. It's coming out and saying, actually, we're fixing it. We weren't fixing it, we're fixing it now. So what happened with the overall market? Market tended to like that, and the market started reversing, right? Market started picking up, market started going on a nice uptrend, surrounded by a lot of good news, a lot of good sentiment, a lot of buying pressure within the market around here, which is obviously a good sign. Now looking at stock Roku, right? Roku was also on a downtrend. It's on a downtrend, bad earnings, gap down play. You guys can see, went over gaps. It gaps down, takes a break, continues, takes a break, continues. Same exact idea as the market. You can see December, huge sell-off, huge sell-off. Now, what happened after December? Company Roku came out with good news. Stock gapped up because of bullish news. Overall market is in an uptrend. So the good news Roku came out with, just to kind of start giving you ideas of good news, is that they announced that their streaming numbers were up. They basically announced that we, as a company, we are growing. Wall Street loves to hear that. They love to hear when a company is growing. So them announcing that we're growing, automatically stock gaps up, strong gap up, strong volume, stock consolidates for a little bit, and then continues going up. Strong earnings, and then if you look at Roku's chart now, you'll see Roku is at a high of 140, 130 bucks, right? So that's how you want to look side by side with the market. That's how you want to understand the sentiment. You want to understand that Roku right now is surrounded by a lot of good news. They announced this catalyst. This catalyst is obviously pumping up the stock. It is fueling the stocks move up. The market is also in a healthy condition, so it's much easier for a stock like Roku or any major stock to actually keep rallying and going in that direction. Now, next, I'm going to show you more examples, and I'm going to walk you through on how to evaluate the market and how to evaluate certain stocks, so you have a better idea on how to do this process. So when you are trading on your own, you start realizing what you need to do and what you need to avoid doing. All right, so right now I'm going to break down stock Apple, right? So we are on 7/31/2019. Stock Apple just had earnings yesterday, and they beat earnings. They had phenomenal earnings. As they beat earnings, the stock is up pre-market, right? So during pre-market, Apple stock is up. Now, the only twist is today, there is a FOMC meeting. This is the Fed meeting, major day, major event. Now, this is where things get very, very tricky, and you're going to see what I mean, right? All right, so we have Apple's chart right here. As you guys can see, Apple's chart on a 1 hour chart. Let's go to a smaller time frame, a 15-minute or 5-minute. You can see yesterday, Apple stock has solid earnings, right? This is Apple announcing earnings. They beat earnings. Stock spikes up, showcases a good sign. Let's look at a larger term time frame. Larger term time frame. Apple on a larger term time frame also looks very, very strong, as it's about to open up any second now. As it's about to open up, you guys can see what happens. Market's about to open up, and Apple is about to gap up. So Apple is gapping up. Also, we have a lot of critical levels around 210 to 215. So around 210 to 215, I have a major supply zone for stock Apple, which is now demand zone. So you guys look right here. Let me just apply this. I'm going to apply this just so you guys can see. Boom. So around 214, around 215, about 215, 214, Apple has a major demand zone. Stock is gapping above it. As the stock is gapping above it, they just had earnings. So that's a strong gap play. It's gapping above that level. So that makes it a very, very, very great trade. Now, the tricky part, as I mentioned, is today is the FOMC meeting. The Feds have a meeting. Now, usually, and I'll break this down more, when the Feds have a meeting, that day the market is very shaky because everyone is waiting for their announcement, which happens at 2 p.m. Eastern Standard Time. Now, if that meeting didn't happen today, I would be able to recognize that, and I would trade this as a gap up play, and I would trade it on the open, and it could have been a very phenomenal trade. But knowing that there is a meeting at 2 p.m., there's a major economic event in the market today, I need to be extremely, extremely cautious and understand that the stock can trade sideways, or at 2 p.m., depending on the outcome of the meeting, it can either rally or it can either fall. Now, let's fast forward to 2 p.m. and see what happens. You can see towards 2 p.m., you can see what tends to happen with the marketplace. Feds came out with their announcement, right? Now, I'm not going to get into the Fed's announcement just yet. I will break it down later on. And you can see throughout the day what ended up happening. The Feds came out with their announcement, right? They came out with their announcement at 2 p.m. and you can see afterwards with other market news that came out during a day like this, the stock completely reversed. Now, this is very important to understand because a lot of people that were not aware of market conditions and were not aware of the economic events, which we will cover in part 8, and I will explain all the economic events that you guys need to be aware of. But just for now, focus on this, just to bring you back. The economic events, you need to be aware of them because what happens with most people is that they're like, oh, Apple beat earnings on the 1-year time frame, Apple looks phenomenal. And I agree. 1-year time frame, Apple looked phenomenal. It gapped up above the supply zone or resistance level, had a strong opening, you guys can see, but then throughout the day, it got very, very shaky and sideways because everyone was waiting for the Fed's meeting. The meeting announcement. Once the meeting announcement happened, after a few minutes, you can see the stock dumped. Now, obviously, there were other factors involved as well, but the main idea I want you guys to take away from this is that you need to be aware of market conditions and market events, and you also need to be aware of events that relate to the stock as well. All right, so here we have stock Roku. We're watching stock Roku today. Today is 9/10/2019. So what is the story with Roku? Roku's sentiment is reversing. Roku has been on a bullish run. It has been surrounded by bullish sentiment. And at this point, I think the sentiment is now possibly reversing. Their competitor, Apple, also has an event today where they may possibly announce streaming services. So for today, Roku is on watch. News plus price action is what we want to watch just so we can understand the trading environment and we can get a higher probability trade. So let's dive right into it. All right, so right here we have a Roku stock up. We're looking at a 1-year, 1-day chart. We have our supply area, our demand area right here, I'm sorry. This is our area that showcases demand. There's a high possibility for the stock to bounce off this or hold this level. That's the first level known as support. Beyond that, let's break the stock down. Let's understand the direction and everything that's going on with the stock. Number one, we think that this stock has been on a strong uptrend because of earnings, because of massive growth. That is good catalyst, good sentiment. Everything surrounding this stock is surrounded by good news. Now, recently, you guys can see stock runs from about $119 all the way to $176. Once it got to $176, yesterday it took a huge hit down on high volume. Now today, which is the 10th, so today's September 10th, Roku's competitor Apple has an event, and during that event, they will be possibly announcing streaming services. Now, for the people that don't know what Roku is in the streaming business. So if Apple comes out with a product in the streaming business, that product will obviously affect Roku. It will create more competition for Roku, and that's obviously not a good sign. So what we're going to do is we are now going to watch Roku's price action, and we are going to watch out for the event. Now, knowing that the event is today and tuning into the event is a huge plus for trading Roku. So their event is around 11 a.m. Eastern Standard Time, and we're going to watch the event and we're going to see if and when they announce the product, or if the product comes out of the streaming service, and what happens to price action. And if price action gives us a high probability, we will then take on a position. All right, so if you guys take a look right here, we fast forwarded a little bit. This is the low of the day for Roku. This is the lowest point it has hit for the day. It is already on a bearish downtrend. It's moving on the downside. You guys can see since yesterday, stock has been making major moves down, pulls back, moves down, pulls back, moves down, pulls back over and over again. Same thing today. Today, it's been very, very choppy. You guys can see on the open, it moved down, went up, made a lower low, went up, wasn't able to break that point, and now it is still going down. So right now, Apple is having their event, right? Now, our trade idea would be something very similar and very basic. This is the low of the day, right? Typically, what I like to do is if I've established the low of the day, right, and let's say there is some negative news that's kicking out during the exact moment. If there's negative news that comes out or any sort of catalyst that's affecting the stock, I would then take on the trade if it connects with price action. Now, connecting with price action would, what I would need is I would need the news of them coming out with the streaming service, and I would need price action to make a new low of the day or break this 151 level. Why would I need it to break the 151 level? Because if you guys take a look at the 151, we kind of have a strong point. It's not the strongest level of all time, but we do have a critical level around 151, around 150. Also keep in mind that 150 is a round number, so that number is obviously watched by many people. People probably have stop losses here. A lot of people are probably going to enter here, whatever the case is. So this is something we are heavily watching. You can see last time when it went above 151, got rejected, and broke out, retest, and ran. So that 151, that 150 is a major point for us. It's also a major point because of the fact that it is the low of the day. So we want to see the stock get around this level, and then we want to watch price action before we take on a short position or before we buy puts, right? So let's take a look and see what happens. So I'm going to fast forward a little bit just so we can kind of move on and see what's going on. All right, so if you guys take a look right here, you can see Roku is making a new low of the day. What happened again? Buying pressure kicked in here, buying pressure is kicking in. Now, as of right now, I'm not going to chase this trade. I'll maybe alternate between the 1 minute and the 5 minute and see what's happening. Now, when I go to the 1 minute chart, I can kind of see more price action. I noticed right off the bat on the 1 minute chart that there's a lot of buying pressure stepping in here. That buying pressure, you guys can see on the wicks, is giving me an idea that buyers keep stepping in and bringing the price up. Now, if I want to be a buyer, or if I want to, let's say, short this trade, I want to see the candle close below 150, and I want to see a strong close on the candle, right? And I'll go over a bunch of more trades in the upcoming lessons, but for now, I'm just going to give you guys this one so you have a better understanding as we progress. So once again, a lot of buying pressure around 151. You can see on the 1 minute chart, we can see that. Now, as we keep progressing, I'm going to fast forward one more time and just see what happens. You can see it's slowly making a new low. It's slowly bleeding. Now, the reason I'm not comfortable in this trade yet, even though I want to short it, even though there's catalyst, even though price action is looking good, it's not making any major move. It's not creating a sell-off. Now, if you look, this strong candle down with high volume is giving me confirmation that, okay, sellers are stepping in. Sellers are stepping into this trade. I look at a larger term time frame, a 15-minute or even a 5, I can see this looks very, very strong. So that itself is giving me a strong confirmation to take on a short position. So let's just say I short 100 shares real quick. Just to show you guys, let's just say I take this position. Once again, looking at this, you can see shorted 100 shares at $150.86 average price. This is how much we're up at the moment. So you guys can see what's happening. I'm going to fast forward one more time just to see how price action keeps moving. Look at this. It's still selling off. Now, if we go to a larger time frame, we can see our next critical major level is around 140. So there is a small possibility of this stock selling off to 140. Now, obviously, it can reverse from here. It can retest this level. It can continue, whatever. There's so many things that can happen, and that's where managing the trade kicks in. But the whole idea I want you guys to take away from what we're going through right now is this, that it broke the low of the day. It broke a critical level. That's number one. So price action is giving us a check. Besides the price action, the stock has negative sentiment. The negative sentiment is also giving us a high confirmation that there is a high probability that this may possibly sell off. What is the high confirmation? What is the negative catalyst? The negative catalyst is that their competitor Apple is announcing or has announced that they're releasing a streaming service and charging $4.99, and obviously them coming out with the streaming service is going to affect Roku. Right? If Apple comes out with a product, that's obviously going to affect their competitors in a negative way, and that is happening to Roku. Now, if we look at Roku's daily chart, you can see Roku looks extremely overextended. So for now, this could just be a pullback into the support area and then maybe a continuation, or this may be a pullback into support, consolidation, and then a continuation sell-off. We don't know. The only thing we know is right here we have a good and high probability trade, and we are going to take that trade and we are going to go ahead with it. Now, in this lesson, I'm not going to jump in on where to exit and how to manage the trade. There are upcoming lessons where I will go over that. But if you just look at simple price action, you can see what happens. Huge move down, strong red candles. You can see strong volume. It takes a break with this doji. And then what happens right after that? It continues. It's continuously selling off. If I go to a smaller time frame, like let's say the 1 minute time frame, you can see the same exact thing. Stock takes a dump, takes a huge move down, pulls back, gets rejected, stock is selling off again. And remember, when something moves down, there's a probability or there's a possibility that the stock may come back and then continue. We don't want to get faked out. We don't want to panic. We understand. We need to establish our critical levels. We need to understand that this is the point that the stock needs to hold. Same thing here. These are the points the stock needs to hold, right? If it can constantly keep holding these points, we will then have a high probability of the stock working out in our favor. And you can see same exact thing over and over and over again. Strong sell-off, pullback. Sell-off, pullback. Sell-off, and you can see buyers are stepping in. Now, when we go over the managing your trade concept, I'll show you when to get out, how to notice when you should get out, all these things. But if you're ever in a situation where you're kind of like, okay, I'm up $439, I'm up $200, I'm up $3,000, I'm confused, I don't know if this is gonna go up, I don't know if this is gonna go down. In all those situations, what you should always do is just exit. Just get out the trade, exit the trade, right? And I'll jump into that in managing the trade once we get to it. But what I want you to ultimately understand right now is the concept of combining price action with market structure and the structure of the stock, what the sentiment is, and what the overall picture is. That will give you the highest probability trades. That will also give you an advantage on finding stocks that are in play, finding stocks that have fuel behind them on the up or down side. These are the plays you guys want to look for. You want to look for plays that have fuel. You want to look for plays that have something that's pushing it up or down. You want to look for plays where the market is correlating, where the stock, it has some catalyst behind it. These are going to give you the highest plays out there. Just to recap everything once again, when you are trading, you need to know your trading environment. You need to know what direction is my stock going in. At times, looking at the market as well, such as SPY, is also very, very important. Knowing, okay, what's happening with SPY? SPY is actually pushing down. SPY is actually having a hard, choppy day, right? Are there any market economic events? Are there any news coming out with the present company that I'm looking to trade? All of these things are extremely important. And like I said, when you guys first get started in all of this, it looks like it's a lot of information and a lot of things you have to analyze. But I promise, once you trade and once you build consistency and do it over and over again, it becomes second nature to you. Promise you that.